Hey traders, John Howell here. Let's get ready for another amazing week. In this video, I'm going to be going over all the stock market indices, S&P, Dow Jones, Nasdaq, the Russell. Be looking at the mining sector as well, a bit of an update. What's going on right there? What's likely to happen moving forward? I'll be looking at the good old Bitcoin as well too. I'll be looking at the fear and greed index. I'll be looking at the interest rates as well too, and what I'm seeing happening right now. Plus also I may even bring up the good old market cycle as well too, and a bit of a big picture analysis. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Traders, if you need help with your trading, I'm giving away, I'm basically giving it away, $7 traders to my breakthrough trading course, as you can see through there. If you need help with your trading right now, then this is it for you. $7. And hey traders, if you're not happy with it, just let me know. I'll refund you the $7. It's not about me. The $7 is not going to change my life one iota, but it will for you. Go get it right now, guys. johnsflashsale.com. All right. So let's actually start off with the good old indices. So the first thing I'm noticing with the good old indices is that we are really starting to peter out, and it's actually we're starting to get very frothy where we are right now, and so therefore I wouldn't be too surprised. Let's actually bring up just the 1 year worth of data. Okay, one more. Let's actually bring this up through here. Okay, so 1 year worth of data on this screen through here. We can see that we're getting very frothy through here. So I wouldn't be too surprised, traders, if we saw a continuation of selling into the markets this week following for this week here. I could be wrong. We are still in an upward trend. So that's the whole caveat with this here. And it's going to be like, it's a do or die situation, really. It really is a do or die situation. If we do hold here, because we are still making these higher lows, and as you know, in an upward trend, we have these higher lows, then obviously that's still intact, okay? We are still getting these higher lows intact. So if indeed the market doesn't do what I said initially, which was we break through here. If we break through there, traders, then that's probably going to, the breakout is to the downside, okay? Because we're breaking out of this sort of triangle pattern here. And the breakout to the downside will probably send us, I reckon we're due for a big 10% correction, okay? A big 10% correction. But mark my words, traders, that is not going to be the top. This is not the top, right? Big X. Let me actually, let me change the color here for you, right? This is a big X. No, this is not the top. We are not at the top of the market yet. We are too early in the market cycle. All right, let me share with you what I mean. So this is the market cycle here, traders, okay? We are too early in the market cycle, okay? And again, there is no definites in these markets, but when I'm looking at the probabilities of where we are in the big picture, and if we do get a pullback, is at the top of the market, et cetera. I look at the market as a market cycle as well too. This is the big picture of this. This is more like investing type of approach, okay? If you're not even an investor, I mean, you're not really buying and hold for at least a month or for a month, at least for a year or two, right? Then this doesn't really bother you, right? But because trading is all about based on the market. But if I'm looking at the market cycle, traders, I'm still seeing most people are, we have this whole, you know, the big boom, and then we have the bust, and then we have people getting cranky, and then guess what? Then we have this bottom, and then we go through this move here, right? This is exactly what happened with Bitcoin, right? Bitcoin back in 2017 ran to 20k up here. Oh my God. My brother-in-law was involved with Bitcoin. You know, I had, you know, my friend who's in the network marketing industry. He was talking about Bitcoin can only go up and et cetera, right? And then the whole thing came crashing down. Even my ex-wife, who has no idea about the markets, she was talking about getting it. I'm like, this is definitely the top, right? That's the contrarian. And then obviously the market came down. And as you know, the market went from 20K down almost down to around about 3K. And then it bottomed out for a long time. As remember, this actually happened, and then it bottomed out for about 3 years. And then we started what? And then we went through another big cycle, and now we're having a big pullback again. So this is not about Bitcoin, right? This is all about just understanding the market cycles. But we're looking at where we are. We're looking at the market cycle right now. I am seeing that majority of the overall stock market, this is not for individual stocks, right? You got to see, you could apply this to the actual individual stock, but we're looking at the S&P 500, the good old Nasdaq and the Dow Jones, and possibly even the Russell. Russell's the one a bit of a slow dog, but looking at this here, I see that, yeah, we've had a rally, but we're still very early on in the market cycle. There's still too much negative Nancy's out there for this to be. There's too much negative for this not to be a top, right? Or for this to be a top. There's too much negative. Man, what am I trying to say here? I'm trying to say is that when there's so much negative out there, you don't get a lot of negative people out there. When major tops happen in the markets, right? What do you get? What happened with Bitcoin over the last, say, 12 months? It rallied up, came down, rallied up, and then when we had that second leg back up to 60, it went down to 30, went back up to 60, as you know. Guess what happened? You started seeing articles of people making millions of dollars, and you see this crypto that, crypto this, crypto that, crypto this, crypto. Oh my goodness! In the last 3 months, 50% of all trading accounts of cryptos have opened up, and blah 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 blah. All that sort of stuff, right? You start to get this massive optimism. Bitcoin's going to 100,000. Bitcoin's going to 1 million, and all this very massive optimism you get at tops of markets. I'm not seeing that with the good old stocking market. I'm saying this is it. This is the top. The top's in. The top's in. The top's in. The top's in. The crash. No. Right? That's, if you hear those voices in the stock market, this is where contrarian is always. This is why it's hard for an individual person who's new to the markets, maybe for a year or two. And it took me a long time to understand this. I've been trading now for 17 years, and my first 4 or 5, probably 5 years, I had no idea about the noises, right? I always heard, oh my goodness, if everyone is saying that this thing's going to 100,000 Bitcoin, then it should be true. Or if everyone's saying that the top's in, the market's going to crash, then it should be true. And you know, and I learned my lessons big time throughout that time, and I've actually made that mistake a few times. And my very last time I made that mistake before I hit the nail in the coffin on learning that lesson was when Trump was being elected. Let me share what I mean here. Let me go back to the weekly charts, and let me go back to when Trump was being elected. Okay, so look at this here. This is when Trumpy was being good old Trumpy. Trumpy was being elected when Trumpy was being elected in 2016. So the end of 2016, right there. That's when Trumpy was being elected. Now, if I'm looking at simple technical analysis on this weekly chart, what's going on here? Are we in a downward trend? Are we in an upward trend? What's going on? Well, we went from no one in control, sideways, and then we broke out. Higher, low, and then the market started to stair step up, and then, as you know, the market just continued all the way up to there. But what was happening before this time, okay? Before this time, what was actually happening? And this is where it's important, guys, this whole lesson is about the herd mentality and the noises of the public, okay? Because the noise of the public is the opposite to what they say. Because if most people lose money at investing, then if most people are saying something, do the exact opposite. My earliest mentor said that to me. He said, John, I'm not really sure all the time what to do, but I figure out what most people do and I do the exact opposite, and then it seems to work out pretty well. And as I said before, traders, it took me a long time, and I even made the mistake back in 2016. So many people, as you know, through this whole 2015, maybe 2016, especially when Trump started getting elected, it started to come out that the market's in, the top's in, the crash is going to happen, and all this sort of stuff. Harry Dent came out, and all these people came out, you know, even, oh geez, I just burped. Even Harry Dent came out and said, even Robert Kiyosaki came out and said, you know, I predicted the last crash, and then this crash had happened, and I started getting sucked into all this stuff out there. Now, you may have been sucked into all that stuff in the last 12 months in the stock market, and you're wondering, like, why does the stock market continue to make new highs when you have all this stuff out there and all these people predicting the top, and the market makes new highs, right? You may be in that situation, like, how the hell does this thing make new highs when there's so much negative news out there? See, that's the thing, traders. That's the thing, right? It's the opposite. When there's so much negative news out there about stuff, then then generally speaking, that's not the top in the markets. The top starts to form when there's an overall optimism in the markets. And so once again, tries back through here. I started, I had almost $500,000 in short options in the market. That's what I did say, options. I had almost $500,000 in basically, let's just call it put options, right? Because I was long the VIX, looking for the spike, and I was short the SPY. I'm laughing now, traders, because I look back and I'm like, I did that. Why? Not because, in fact, the actual, once again, the chart was telling me, if we actually look at the charts, the market was continuing high, low, high. The market was continuing up. And that's where we're like, we need to listen to the market, not our douchebag minds, right? But I got so stuck into the herd mentality back then that I thought, oh my goodness, surely the market's going to crash because Robert Kiyosaki predicted the last crash and he had the future and right? The only person that said the market wasn't going to crash was Ray Dalio. Ray Dalio said, just relax. Wait, we've only raised the interest rates once here, right? And that's the big thing I didn't understand about market cycles, is that it takes a rising of interest rates, and when we start to raise interest rates, we're roughly around, not always, but if we raise interest rates and raise interest rates and raise interest rates, and if we do that this year, then probably at the end of this year, probably 12 months from now, we're going to see the big pullback and the collapse and all that sort of stuff, right? We're not going to start to see frothiness from that. So all through here, there was so much negative news, and then the market went up, and it was just like, I banged my head on the table. Now I got out. I lost almost about $200,000 in this position. And I did get out. Again, luckily I went back to trading my system, and I made all that money back plus a little bit more. So I was still positive that year, but I should have been up so much more that year than I did. Then I learned the lessons from that. But learning that lesson has been very, very, very helpful for me to understand what's really where we are right now. And if you've been following me for over 12 months, you'll know that I've never caught a top once. No, the top's not in. No, the top's not in. Even on these big pullbacks and people shorting the markets, no, the top's not in. The top's not in. And even right now, okay, so even right now when we're looking at these markets through here, we're still at this cycle. So yes, we can get our big corrections in the markets. And we're probably, if we do start to break down out of this here, we're probably on our way back down to probably in 4,300 in the S&P 500. We're probably going to start to see that, and that's going to be one hell of a shock to the markets. But I believe that's going to be a bit of a springboard to the upside, and not a. I think it's going to be a bit of a springboard, a bit of a slingshot pattern to the upside, and not the top of the market. So there we go, traders. A bit of analysis on there, but that's the same analysis applies for the Nasdaq as well too, traders, and the Dow Jones as well too. The Dow Jones is actually one of the biggest, the much more of. It's the strongest one out of the whole lot of them right now. But the Russell's looking weak as all hell. So we've come back down. We've actually held support through here. We try to break up and we try to break down, and now we've just gone sideways. So once the Russell starts to break out, if we can develop a bit more sideways range here and then break to the downside, we're probably going to start to see a bit of a waterworks in the markets. If we have a look at the 10-year, the 10-year is really starting to spike. This is the 10-year rates through here. So they're at 1.7. They're probably on their way to 2%, and that's going to definitely start to hit, especially the stock market, and a bit of pressure in the markets as well too on the short-term basis. So that's what I'm seeing through there, traders, when it comes to the good old stock market itself and what's going on through there. Let's have a quick look. So I'm seeing weakness that's happening through there. In this pullback, I do see pretty much everything having a pullback with it, right? We're going to see, traders, guess what? We're going to see the talking heads. We're going to see the bumblebees. We're going to see the people out there, do their thing, right? Oh my goodness, the top's in. No, right? One thing I really want you to keep an eye on for, traders, is this, okay? One thing I really want you to keep an eye on for if this does happen, then keep an eye on this guy here. This is the fear and greed index. Keep an eye on this guy, because this guy's going to tell you when we're starting to get to maximum fear in a pullback, then this fear and greed index over time, okay? If we can start to get this maximum fear, just like we did back in the vid situation, and then we had the rise, right? So if we start to get a sell-off, we're probably going to see this thing come all the way back down to here, and guess what? It's through this time. You may buy it here, and then you have another week or two selling off, but if you're looking to buy as an investment, then you know you're getting pretty close to the bottom, especially if we start to get close to zero on the maximum fear in the markets. That's when you're probably going to start to see things not work out too well. Not work out too well for the shorts, and we're probably going to start to get a big springboard because this was the bottom here, even in the black swan event. So move over now through to and so with that whole sell-off, I do see the mining stocks are getting ready for the mining stocks are setting up for a sell-off as well too. And again, traders, people say that, traders, this is all about just reading the markets, right? This is not my opinion. I'm just reading what the market's telling me. This is about the market, not me. The market's always right, okay? So when I'm looking at these markets making these significant high and then a lower high, and we have this period of sideways movement, traders, that's developing what we call time phase, resting phase. And every time we do that, if we do break below that, get ready for a waterworks. And that's probably going to see waterworks come across with all markets, possibly even the good old Bitcoin. I'll get to that in a minute, right? So that's what I'm seeing on the gold mining stocks, the silver mining stocks as well too. That's starting to roll over as well too. And I talked about this as well, right? High, lower high, lower high. The market is still in a lower high situation. So, right, especially right through that level. That was that last level through there. Let's go to the weekly charts here for a minute. Yeah, you can see that is the line in the sand, especially for this SIL. But I see that thing being broken once again. But you can see how we really had a strong move down. And then now what have we done? We've just gone sideways. What does that sideways mean? Every time we do that, we generally, and if we do break with the trend, we're probably likely to continue, right? Just like we did back here. Look at this back here. We had a rise up. We had a sideways. We had a higher low, right? So the trend is up at this time. We had a sideways, and then when it broke out, we had a move. We had a continuation of what? Of that trend. Same as the situation we're getting right now, right? We're getting a strong move down. We're getting a sideways. So if indeed we do start to break out through here, guess what we're likely to get? We're probably likely to get another move on the downside as a continuation. This is a warning sign, traders, that we need to keep an eye out for. The gold situation is always the hardest one because we're not getting any clue here yet. The only clue that I can get here, and it doesn't mean anything yet, the only thing I'm getting from this here is, once again, we're getting this movement down, and then we're just getting this really frothy sort of not much going on. So the hardest thing about gold is we're not really in an upward trend, we're not in a downward trend, we're just sideways. So if we do start to break down below these levels through here, right, we start to get a big breakdown like that, then that's going to tell us, okay, gold's probably going to go through a bit of a sell-off. If gold does start to break up out of this triangle pattern like here, then gold is probably going to start to rise, which to me, that doesn't make sense, because if gold does that, silver may do the same thing as well too, and we start to see something like that, right? So that's what I'm seeing through there when it comes to the gold price. And then also the silver price. Silver's looking really sort of ugly on the downside. Now, I say ugly, right? It's not really ugly. You can short and make money, right? Silver's looking real good. Fuck you, John. Especially those people that are buying, holding, and hoping this is going to be the bottom before it starts to rise. And once again, what do we have here? Look at this here. We have a strong move down, and look what we've done. We've just done nothing here, traders. We've just done nothing through here. It's resting. And every time we have a move up and then we rest, we go for a move up and then we rest, we go for a move up, right? Same through here. So if we have a move up and then if we start to get a breakdown like that, traders, again, this is not my opinion. This is just me listening to the markets and not me throwing my views and my opinions at it. And if this does happen, it's traders. There could be. I'm not telling you what to do here. There could be a really good shorting opportunity there. Now, traders, whenever I get into a trade, I follow a set of rules and a system, right? I don't just, this is breaking past support, so let's go short right now. Traders, I don't do that, right? I always make sure that everything lines up with my rules first, and then I enter the trade. I don't say, it looks like it's going to go down. Like, no. If you want to actually get ahead in these markets, even if this market does break below this support level, I still need it to meet my certain criteria. Otherwise, I don't trade. And one thing that may surprise you about my trading is that, do you know, I would have to say throughout the year, when it comes to, not my investing, I'm always in the markets, okay? Or not always in the markets, but I have longer term positions, right? My investing is like the buy and hold situation. Okay, let that go. When it comes to my trading, right, my actual active trading, do you know that 90% of the time throughout the entire year, I'm not actually in the market at all when it comes to my trading opportunities, and 10% I am. Maybe let's just call that 80%. 80% of the time, I'm not actually in the markets, right? So like even right now, as I speak, I'm not in the markets for any trading opportunities. Now, investing approaches, I'm in the markets, meaning I buy and hold, but that's just buy, hold, let go through the pullbacks, the swings, etc., right? Let that go. But when it comes to my actual trading opportunities, when I'm trading the markets for income, I'm not in anything right now. I haven't been in anything for the last couple of weeks, right? My last sort of trades that I had, as you know, my last sort of trades that I shared with you was Ford. I jumped on the energy boom as well too, that energy spike that we got recently. As you guys know, I jumped on that. So this big massive energy spike, I jumped on that and did really, really, really well from that, et cetera, right? So I want you to understand that just because if something just breaks below, if I say, if this breaks below, we're probably going to get a waterfall, or this breaks up, et cetera, doesn't mean that I just buy that. No, I still need to wait for a certain criteria. Because if you ever want to start to get really confident, start to put on big positions, not just a $500 trade or a $100 trade or a $1,000 trade, but we're talking a $20 or $30 or $40 or $50,000 position, or even a $100,000 position. How do you become that confident to actually put that on? If you eventually want to start to make millions of dollars from the market, then you need to start to put on much, much, much bigger positions. And from that becomes confidence. And if you don't know what you're doing, you get wiped out really, 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 really quickly. Let's go have a look at the good old, let's go have a look at, we had a look at interest rates. Let's have a look at, let's actually go to the US dollar here, all right? One thing with the US dollar, a lot of people talk about the correlation between the US dollar and gold. Traders, that's what people say. What a whole load of bollocks. I'm sorry, traders. I'm sorry. But if the dollar has been rising since May, right? We've been rising overall. Now, we've actually had quite a nice rise overall in the dollar for the last 7-8 months. But gold's done nothing for the last 7-8 months. That's not a correlation, because if that was the truth, then gold should be doing this. Gold should be doing this as well. But what's gold been doing? Gold's just been doing this. Just sideways as the dollar's been rising. So traders, if you think, and if your approach is, the dollar's going up and the dollar's bullish, so therefore gold's going to go down. Or dollar's going to crash, so therefore gold's going to go up. Do not ever, ever, ever trade based off that. Because as you can see, that's not a actual factual evidence that actually appears all the time, right? It's just it's an overall judgment, theory, whatever, right? But if you just look at the facts of what's actually going on in the markets, don't ever make a decision based on, the dollar's about to crash, let's actually get into gold. Don't ever do that. Because look at the facts here right now. Dollar's gone up, gold should be going down a lot more. But why hasn't gold been going down in a big downward trend when dollar's been rising in a nice upward trend? So don't ever make a decision on that. If you want to get into gold, use gold and use just that one market as your analysis of why long term or why short term. Long term should be macro cycles and so on and so forth. By the way, I do see gold making some incredible moves. Like I have a 3,000 target on gold over the next couple of years. When it gets there, how it gets there, you know, so on and so forth. Who knows, right? So, but that's what we're looking at. We're looking at that situation there when it comes to gold. So when we're looking at gold situation right now, do your analysis on gold and why you like gold and why it's likely to do what you think it's going to do. If it's investing, look at the macro cycle things. If it's a trading, look at the patterns on the charts and so on and so forth. All right, so I just know some people just that there's so many people out there that just recycle this bullshit garbage that just like, well, I heard this once and it sounded good, so let me just create a YouTube video and recycle this whole bullshit garbage. It may be actually no, I'm not even gonna go there, right? It's not always. Every now and then you may argue, oh look, dollar's going up, gold's going down, or dollar's going down, or gold's going up, or so on and so forth, right? Even just recently, gold, a dollar was going sideways and we had a big drop down. How come gold didn't have a big rise up? It should have a big, you get what I'm saying there, right? All right, enough with that. Moving on now through to the good old Bitcoin. Yeah, it's definitely Bitcoin for people, I'll tell you that. I tell you what, I just got so many dislikes, but that's okay. I'm just telling you guys the truth. Hey, you can ignore reality, but you can't ignore the consequences of ignoring reality. And the reality of what I just said there about US dollar and gold is the truth, because it's actually right there in front of you. It's the reality. Anyway, dislike. That's all right. Dislike the way you hell, guys. So what's happening with Bitcoin is that we're still in a very, very big downward trend through here. And there's a very big sort of key line in the sand. Let me erase everything off the screen here. There's a very big line in the sand where you see this, notice, that's the reason why we're finding a lot of support where we are right now. We're finding a lot of support around the 40,000 and we're just sort of hovering around here. Now, if we do start to break below this 40,000, if the stock market starts to pull back like I think it's going to, it's probably going to pull everything back with it, guys. Metals, miners, and maybe even the good old Bitcoin. And if that has to happen, we're probably going to start to make our way back down to 30,000. And you know what? It's probably going to get down to 30,000, and then it's possibly going to break below it as well too. Because what generally happens with a lot of these times is that if the market does start to make its way down, it'll make its way down and it'll break below here because there's a lot of stops below here. So this drives investors nuts, or even traders nuts. There's a lot of stops down there. So people that have bought Bitcoin, like this is the major low. So people put their stops just below here. The stock market runs the stops, so they take out all the stops, and because it's breaking below support, there's a lot of people going short here, and then the market totally reverses. So not only did it take all the stops out, but it got people short, and then it reversed, and then people had to cover as well too. That happens so much. And traders, this is just the way the markets work, right? You see this so much and so often in the markets. Like even back here, look at this back here. The exact same thing happened back here. See this here? Look at this here. Had all this major support level. Right, look at all that major support level through there. Look what happened. It actually flushed down. Did the exact same thing, and then that started the big bull market. It's just so traders, that's what you expect, right? It's just what the market does. So you just got to expect that. Now, we have been going down for quite some time. So it would be really helpful, or be really good if the market, let's actually see if I can bring up this one here, right? And just bring up the 52 moving average. As you can see, right, look what's happening here. We're pretty far away from the moving average. So what would be more helpful, what would be better for Bitcoin is for it to do nothing, right? We are in a big downward trend, so maybe we're just going to get some sideways movement as we start to see this thing catch up a bit more, right? Because we're seeing it through there. Maybe it's not. Maybe we're just going to continue down. We've got this strong 20 moving average, so we've got a very strong trend, but we've been going down for quite some time. So I wouldn't be too surprised if we did get a bit of sideways range. But if we do start to see a breakdown, we're probably going to see our way down to 30,000. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few seven-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.